Okay, testing. All right, Sherman here. Sunday, 18th of October. So I just finished training for some people who want to see me trade, and we did 30% on the account. I was really quite aggressive. The drawdown was anywhere between 4% to 11. 11 was a little bit high. That was not too good, but generally quite good. I mean, considering I was pretty aggressive, we managed to get 30%. 28% actually, about 20% in 30 days. So that was pretty good. That was pretty good. Okay, so I have some time now. I have some time now. I'm going to take a break from trading. Probably Tuesday, Wednesday, I'll start again. So I just thought I'd look at some of the commodities. I have not been looking at them. I've been looking at Forex mainly. Let's see what is going on, baby. What is going on? So if you look here, okay, this one broke the high. Yeah, when you break the highs, it's not when you want to enter. So when you break the highs, when you start to pull back. See, so when they break the high, that you want to start to look for the pullback, and yeah. So if you were here at this level here, it popped up above this level, and then it came back down. See, so let me just look at it again now. Let's see what's going on. See, price was here. This level is not when you should be looking for the buy because there's going to be some kind of pullback coming, and you got the pullback over here. Okay, so let's see what's going to happen now, huh? Tricky though. Quite tricky. Okay. Oh, sorry about that. I'm a bit tired. Okay, so it's a D. Okay, let's go daily. Question is, what is this? What is this? We slept on a moving average. Let's see. Let's see what we get. We're moving average. See whether it helps us in any way. That's not much. Let's go typical moving averages 20. Because it's trending mode, right? If it's trending mode, moving averages can be quite useful. It's not much there. 20. See that? So this one actually makes sense in the weekly. This even make more sense. See that? The 20 moving average. Wait. So this week coming up is going to be quite important. This week's going to be important. So actually, it's not that hard to trade. Maybe I should just post this on trading view. So basically, now we cannot say it's going to happen, but this is what you want to happen because if that happens, then it sets up a good trade. So what you actually want is for this price here to, okay, I want this to stay here red. Basically, that's it. That's it. So if you get a green like here, this week, if you get a green over here, this would be a good buy. It means if you decide to if you get a red here and then you get a green over here, this is actually a pretty good buy. Then you can try to follow it up again. So if possible, you want gold to go back up to 2000. Yeah, that's basically what we actually want. So basically, you want this one to end right here. Then you want this a green candle, and then try to find some way to enter here, and then try to see if you can not take profit over the next few weeks and see whether you can go break the top again. That would be very good. That's very good. That could be, it could be a double top actually. Make a very good double top. Then once it's there, you want to exit because why? This is possible. Where it could continue, but then you want to see if it find there's a rejection over here, maybe some stopping volume, stuff like that. Then this one could actually be coming back down. Okay, so all this moving averages are useful at the right time, especially when it's in trending mode, right? Otherwise, it's pretty far from 200 too. So it might come like this. It might do three. Let me see, three, two, three, 3, 2, 1, 2. No, that don't work. 3, 2, 1, 2, 3. Yeah, 3, 2, 1, 2, 3. You could get something like that actually. That's possible. Coming down. This one might be there. That's this moving average might then start to be so price could come back. Gold could come in. Now this is just one possible movement, but you don't really know it until more stuff has developed, right? It's just possible. But right now actually the buy is the interesting one. You should look at this buy is interesting. You don't want this one to come down like this. This is not good, right? The easier trade right now will be actually look for the upside, like this one, what I just drawn. See, you want this to be kind of red here. See red here? Moving averages, right? See. Then if you see a candle that takes out this one, then you can be looking for upside. Okay, so it's a good trade. If you lose, then it's all right. The most important is to know where to lose, right? It's not trading is not about knowing how to win. It's about knowing how to lose and to lose well. So whether it's stocks or gold or oil or forex, we play not to lose. Okay, we don't play to win. We play not to lose. I think in game theory, the winning mindset is all about playing to win, right? The soccer game, you have to go with a winning mindset to win, but not true in forex. Not like that. You play not to lose, right? So if let's say in the soccer game, you see, in a soccer game or any sport, it's all finite. We know that if to win, we just have to score more goals than the other guy. The goalpost will always be at the end of the fields. If we can put the ball in the back of the net more times, we're going to win. But guess what? In Forex, if you compare that football to or soccer to Forex, imagine the goalpost. Every time you try to aim for the goalpost keeps shifting left and right. So you think that, all right, I'm gonna score this time, but guess what? The goalpost goes to the left, and what's supposed to be a goal ends up not being a goal, because that's like forex. You know, you're aiming for this. This is where the goalpost is, but then guess what? Maybe the goalpost just goes up here, and then you stayed in it, and then it goes up higher. The goalpost and the goalpost came closer to the ball and allowed you to score an easier goal, or in this case, make more money, right? However, what if price action, you take the buy, it goes up here, and then suddenly it just like this, and then it just collapses down. This is like the goalpost shifting, you know. So we may have gotten a good entry. We tried to stay to the end, but price action decided, nope, sorry, I'm not going to get there. And then I'm going to come down instead. At least we know where to take the loss. We know where to take the loss. So we have to find something simple here in order to trade it actually. These are all good examples right here, see? All good examples like this one, see here? You see red, so this red here, all taken out. This is the weekly, yeah. Could even go to 2 weekly, I think. Yeah. So let's say I remove all this. Let's say 2 weekly. So 2 weekly presents a different set of data. Right. So let's say on the weekly we were waiting for what we wanted, but it didn't happen. So on the 2 weekly, this one, maybe what could happen is this could go up and then drop here. Maybe it drops out, it goes up, it drops here. And then possible that could be that This one could actually be that. You're just looking for price to play around the 20 moving average because it's trending. So when it's trending, forget about impulse correction. Impulse, you're on a trend, just play with trend. Sorry. So something like there was a red, then there's a green. Yeah, see here. So you know your stop losses. So see that. So this one possible you could have traded the gold as well. Many ways to have entered. Here was a potential entry. If you know how to enter on the low time frame, you could have tried on low time frame. But in general, the bias would have been upside here. Right? The bias would be upside. So what I'm trying to say is here, if you find something similar, maybe there's a red candle here that's coming down. Right? Then price action goes. Then you get a strong price action that goes breaks the top of the candle. Well, then this is probably going up. Because why? This is in the trend. So you play the trend until it ends. Okay, that's for gold. So gold, that's one way to trade gold. Okay, just sharing that. What else? What else about gold can I share? Let me see. Let's click into the 4-hour daily. Is there anything here? Nothing much on gold here. 6-8 now, 3, 2. If you ask me, just looking at how price moved like this, it came down, it came up, and it came down like that. This is one complete wave. So in terms of wave structure, this could be anything, but the upside looks nice. The upside looks nice to play. Let me see. That or this. If you ask me, tricky. It's tricky. Let me see. This looks interesting. If this could come here like this, right? Stop right there. Maybe if you trade volume, you understand what volume can do. You see it stop here. This would make very good trade to the upside. In this one, if you see anything, this will go out break this top for go. So this is not moving average. This is knowledge of how price moves basically. So earlier I gave an example of how to trade using moving averages. So if that happens, maybe who knows? I might get a junior trader to be looking at that, monitoring that for me. But when I'm not monitoring that and I'm day trading, this is something that I might be looking out for. And if I'm trading gold, this is something that you kind of want to see happen. Come break this low first, and then when it breaks the low, you don't want this to happen. Why? Because if that don't happen, this will happen. So if you see some movement to the upside, that's when you try to take the buy. So this, if you risk small and you get the big trade, that's how you can do 30% on the account. So good traders do about 30. I mean, the guys who park some money with me saw it for themselves. So what more can I say? Cat's out of the bag. But actually, if you're really good at trading, you can make about 20 to 30% a month. Okay, so hope you guys can aim for it. So this is, the more styles you know, the better it is. And also there's some time factor involved here as well, because the time factor of this would be, the time factor would look pretty good actually. Time factor trading. So something like that. See here, that would be pretty good for the upside too. But you cannot, if you just buy, that's wrong also, yeah? It's also wrong. You need to be very good at price action. Okay, so that's another way to trade. This one 12 hours. So the other one was a week or 2 weeks based off moving average. This one is based off 12 hours. 12 hours for price action, wave movement. The other one is weekly based off moving averages. So different styles of trading, the same thing. Okay. So that's the trade idea. Pretty simple. So learning is very tough, but executing it should be easy once you know what to look out for. What is this? DEX. Let's go look at oil. So oil, nothing much. So oil, you see, this was supposed to go up. It went up. Okay. So at these levels, it's supposed to go up. First arrow is over here. So if you're in the buy from like, I don't know, 18, anywhere this low here are all good buys for the upside. So you flip this 382 already hit first target. Right? Pretty standard, nothing much. How's our Singapore economy doing? Looking terrible, man. Come on, Singapore. Yes, but the good news is when you're at the bottom, there's nowhere to go but up. So over here, you're looking for the upside. Because if it goes any lower, man, come on, Singapore. Do the best you can. So it looks upside. See? Even if this cross breaks the low slowly, that's fine. You're still looking for the upside. Then it's all the low, man. This is the weekly time frame. It's all the low. So those people in the Singapore stocks, if you believe in Singapore, you should buy. Go and buy more SIA. Okay. All right, that's it. Keep it short. Let's talk about gold and oil. Oh, no. What's going to happen next is more important. So, let me see. Hit the 3-2. Let's go to the daily for oil. Tricky. Generally, what? Okay. You see. So what we hope for, I wouldn't really trade this for now, but if this could come something like that, that would make it easier. Or even if it went down like this and up, even if it went down like this and up, preferably you don't break that. It can, but if let's say this one starts to die off real badly, like it starts to die off, like if it starts to die off like here, and then like this, then for some it comes down, and this is going down again. So you need to develop some more. Right? So I'd say this one just need to wait on oil actually. Just wait, just don't do anything about oil. The money has already been made from bottom to top, so now this is developing. So wait again. It's just a waiting game. Mostly. Now what? So it's less like, what if this one just from here? What if it just, hey, look, it just up? You don't want to take this buy. You need to see what happens again, because this one could just collapse and just come down here, right? And if you see that this is looking strong, like this, these are all good buys to go up again. The trend is going, if you're going to draw some lines, some trend lines, it's going to look a bit like that, and that will happen. So oil is just going to wait now, preferably. Money has already been made here. The lows go up. This, there are many ways to trade this. If you just, but most of it involves waiting. If this comes here, these are all nice levels to buy too. Just buy to there. That's also good levels to buy. All easy trades, you know. Here is where the trickiness is, so it's best to wait for oil. Okay, let's go look at gap trading. That's really nice, man. Gap trading. This data is not that friendly. Not that friendly at all. All these nice gaps. So if you know how to trade all these gaps on the stocks, these are all good things to trade. A big gap, green up, then it goes up, cover the gap. Exit. Stop loss has to be below this one actually. or yeah, it has to be here. But once it starts to move around 50, around here or around halfway mark, is when you need to start to exit. Apple. Okay. So those people who trade stocks. These stocks, your stocks generally quite easy to trade. So if you have the funds and you're able to buy some of the very expensive, more expensive stocks. Actually, the movements are quite reliable. You know? Not as tricky as some of as oil or forex. Well, forex offers a lot of opportunity in the daily markets. Okay, let's look at something tricky. Something tricky. Let's look at Euro Kiwi. Something tricky. It's a tricky little guy with very high spread. Generally not a good pair to trade, but because we like the difficult stuff, we have to challenge ourselves. Let's see what this is all about. I'm kind of bullish about the Euro Kiwi always. 3, 2. But I'm kind of wondering how this is kind of strong. So naturally, I'm thinking this price action from here will one day go break that. But the difficult thing is this going to come down here before it goes up? That's constantly on my mind. So I would say at this moment, it's best just to, if anyone trade the Euro Kiwi, if it's a buy, don't try to trade too far. Just trade, be a day trader, take some, and then just go. If it continues up, it's good. Continues up, it's good. Otherwise, unfortunately, yeah, it's kind of 50-50-ish. Yeah. From price action, from the time point of view, many things are possible actually. Well, that alone is not sufficient, but this could happen though. This could happen. However, if this happens, it will be a good thing because the upside is a good idea. So it's upside is a good idea. Of course, don't just buy the bottom, right? You know, you could always come lower, make everyone uncomfortable before it actually goes. That also happens. So don't just buy at the low like that. Wait for price to actually come down, maybe make a double bottom, turn, and it goes. That's more important than just buying like this. Your Kiwi looks quite strong here. So I think at some point price will go break this top 1.82077. At one point this will break. This all requires day trading. Do not keep trades past Friday. Stick and go. The bias is still upside. For me, I like to buy. If a price looks like it's coming like a sell down, I'll probably skip that. Because I want to take the upside. This upside is always good. So I don't really want to sell this. Let's see. If I do sell this, hopefully we get something easy. See, like this is something easy, right? So if somehow we get a lot of candles like here, and then it's something easy, yeah, maybe I will try it. Otherwise, I prefer the upside for your Kiwi. Some is tricky stuff. Okay, not keep this too long. I'll just end off now. Take care and right.